What's good, YouTube? This will be a longer video, but I will certainly give you the Cliff Notes version of it first in case you do not have time to watch the entire thing. But if you do have time to watch the entire thing, I would certainly do that. The entire video is going to be the first half is me is just briefly explaining everything around self-sabotaging trades, and then the long form video would be the group coaching call that I have in my school community. I feel like there was a lot of value that was provided there that could be a lot of useful information for people. And I would just, if you have time, I would definitely suggest watching that whole thing. So let's get down to it. The self-sabotaging of your trades, one of them that is one of the reoccurring issue that I have that I will no longer have because I know better than this and I've done a great job of not doing this, but it's a very sneaky thing that can sneak up on you, is closing your trades early. A lot of people are discretionary traders, and with that discretion, you have the discretion to close your trade early. Now, here's the thing. It is difficult to ascertain whether or not you should close your trade early because you are using the current market data that's coming into the markets to invalidate your trade rather than having a fixed level. For instance, this is a trade that I had last week, and it would have been a God tier trade because before this happened, I was smacking the fuck out of Bitcoin. I was just winning. And this would have been a win as well. But I closed my trade early on this candle because the market was, there's a lot of volume coming in really quickly. And I just assumed, never assume. I assumed that I was going to get stopped out of the market because I was like, oh, I've seen this before. It's going to be a short squeeze. And I even said that in my community. I'm like, oh, I think I'm going to be a short squeeze. So I just closed early. No. Your stop loss is there to invalidate your trade, not whatever you think is about to happen. Okay. So have a clear invalidation for every single trade that you have so that you do not need to think about whether or not that you are going to get liquidated on a position. Let the market do the work for you, not you self-sabotaging your trade. I can assure you there are plenty of people who are going to watch this video who are going to say, yeah, there's been plenty of times where I just closed the trade early because I thought I was going to get stopped out, and then it just went in my favor. It almost stopped me out, but it went in my favor. Yeah, that's because wherever that you had for your invalidation level was a good idea, and that should be what it is, and not you closing the trade early because you think you're about to get stopped out. Okay. You have no idea what's going to happen next. You have no idea what's going to happen next. It's impossible for you to know what's going to happen next, despite what you think might happen, what's going to happen next. You have no effing idea what's going to happen next. And you need to drill that into your subconscious mind so you never self-sabotage your trade ever again. It's impossible for you to know what's going to happen next, despite it looking like it might stop you out. You have no idea, and it's not possible for you to know. So therefore, let the market hit your stop loss. Take the L as you're supposed to. Don't be trading with emotions. Don't be trading with fear. Don't be trading with any of that. Just be systematic, be mechanical, be as close to a robot as you can. Okay. And a lot of people tell you that you can't do that and blah, 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 because you're human. Listen, emotions will self-sabotage your trade. You are here to make money. And if you're emotional about when you make money, you're going to be emotional about when you lose money. This is not a place for emotions. If you want to be a professional trader, you need to let go of all that shit. Okay? Because all the emotions is going to mess you up. It's going to jam you up consistently. I'm telling you this. Someone's been doing this for 6 years, bro. Let go of the emotions. Okay? I self-sabotaged this trade and I didn't even realize I was doing it. And that's because you need to have clear trading rules and a way that you have a list of things that you're looking at every single day to remind yourself of how you should be trading these markets and how you should not be trading these markets. I have a trading plan, but sometimes you get complacent. You know, you've been doing it for so long. You're like, yeah, I know this and that and that. And then you get complacent and you start to lose the basics of what makes you a profitable trader. Let the market stop you out. Don't close your trade yourself. It's unnecessary. There's going to be way too many times where you're going to be self-sabotaging your trades. Just stop doing it. Just stop doing it. Please, just stop doing it. Look at this trade. I literally was catching Look, this was a good trade right here as well. You see that? You see these red arrows? These were my entries. These are my entries. Entry. I think it took a little profit there or something. I don't really know what this green arrow is, but took a little bit profit here, and then the rest of my position got stopped out about right here, and I was looking to resize in here to catch the real move. This was the real move I was looking for. The real move. Look at this. Come on, bro. 6R. Missed out on 6R because I self sabotaged the trade. Eventually, the pain of self sabotaging the trade will reach a higher capacity of just naturally losing a trade. When you get so good that the pain of you self-sabotaging the trades are more than actually just losing a trade, you will start to become disgusted with yourself, and it will fuel your desire to get better. Everyone should be desiring to get better. That's how you make money. If you have no desire to get better, you have a desire to be mediocre, and mediocre people don't make money. Most of the market is mediocre because they have no idea how much emphasis how much work they need to do to get to where they need to go. It's just like Michael Jordan said when he's playing in the Olympics, they're deceiving themselves about the amount of work it's going to take to be great or something like that. All right. So that's the short of it. You know, spit that out in 5 minutes. If you want the value packed long form video that's coming up right now, please watch it if you have the time, and please join the Skool community because we do these literally every Sunday evening, and I'm here to help you get better, and we're all here to help each other get better. Okay. Thank you. Somewhere around here or something like that. It was my entry, and my stop loss was like right above this level. And on my broker, it was like I almost got stopped out. And
Oh, well.
right when I saw this candle, I was like, oh, I think they're gonna go for a short squeeze. So then I just closed the trade, and that was just such.
Mm.
That's the exact same thing that I talked to you guys about last week. It's just like it doesn't matter how long you've been trading. Sometimes you can just make mistakes that are
Mm.
just they are just things that you know that you shouldn't be doing because you've made those mistakes so many times before, and every time you do it, you just kick yourself in the butt. And I can't believe it was exactly what we talked about. It's like the reason why I don't close my trades early or manually is for this exact reason right here.
Yeah.
This exact reason. And it's so easy to do on the lower time frames of like over analyzing. It's like, oh, you see this big candle. It was like a massive amount of volume. Like you can see this volume right here. The volume was way over the moving average of volume that came in.
Yep.
And I was like, I've seen this before. I'm like, I think they're gonna go for a short squeeze. And I just closed it, and then I saw this very next candle come in. I'm like, "Oh, wow." They completely bearishly engulfed that big candle, and then then it tried to bounce, and then they sold off again, and then right when it got to this candle, I was like, "Damn, okay, I need to get back in." So then I reset my order, but it never got back up there, and it just fell out the sky, and I was like, "Oh my
Yeah.
days."
Yep.
So this right here is exactly why I don't close my trades early or even at all. And this is why it's extremely important to have written rules for the way that you trade the markets so that your rules are there to save you from yourself and also to allow you to trade methodically and logically in the market. So the reason why I don't close any of my trades is because the where I put my stop loss is where my invalidation is. And I need to rewind it so we can see the quarter level so I can see exactly like how I was looking at that point in time. So yeah, okay, I remember now. My stop loss was like right above that order block right here. Hopefully
Mm.
these okay, perfect. Yep, exactly. So my entry was at that 2500 level, and I was like, okay, cool. If we break above uh this level here, my trade would just be invalid. And
yeah,
we got so close to my exit. I guess I just it happens so fast. Sometimes the market gets really, really volatile, and volume comes in really quickly, and it makes you make an emotional decision. And that's
mm,
always the wrong choice. That's always
mm,
anytime the market makes you emotional, it's always the wrong choice.
yeah,
So I was sitting there looking at it. I was like, whoa, there's a lot of volume coming in. And I just assumed that I was gonna get stopped out. So that's one of the mistakes that you'll make as a trader is thinking that you're, oh, well, I'll just get out early to save myself some money because I'm gonna get stopped out anyway, even though I at no point would I've gotten stopped out. Like it got close, but I didn't
mm,
get stopped out. And my one of my rules is that I let the market take me out of my trade because once the market reaches my stop loss, my trade is invalid. So I'm very methodical and logical about where I put my stop loss because I want it to go in a place where my trade is no longer valid. If I
mm,
close my trade myself manually at any point in time, it's because of it I'm overthinking it. Like, that's how I know I'm overthinking it. That's how I know I'm overanalyzing. Like, if I'm closing my trade, it's because I'm doing something wrong. And
mm,
the difficult thing about trading is that you can be reinforced for doing the wrong thing many, many times. You can be reinforced for doing inappropriate things, and you can get rewarded for doing those inappropriate things so many times that you think that's the right thing to do. So
yeah,
you close your trade early a lot and sometimes you save yourself some money. The reinforced behavior and mindset behind that is, well, there's that one time where I closed my trade early and I saved myself some money, or that those 2 or 3 times I closed my trade early and saved myself some money.
mm,
So the reason why I don't like to do things that require discretion like that is because discretion having so much discretion with the way that you manage trades is not really systemized and systematic, and you can't get really good data behind the way that you operate. So the way that you want to operate is that you want to have systems in place so that you can consistently do the same thing over and over, so that you can actually have data that's measurable. If you have so much discretion behind the way that you close trades, it's going to mess up your data. It's going to mess up the way that you operate and flow through the market. So
mm,
I after I did that on Thursday, I didn't look at the markets until today. Like I shut
uh,
everything down. I was like, you know what? I'm not thinking properly. And you got to do that sometimes. Like when you're not trading at the best of your ability, you just got to be like, you know what? Clearly I'm over emotional or I'm doing something wrong and I just need to take a step back. So I was like,
yeah,
you know what? No more trades for the week. The weekend's coming up. Let me just take a break, cool off, and then we'll come back next week with a better mindset. And yeah.
mm.
So
So have you back tested and say that where, like, statistically where a good place to place a stop loss is, kind of thing? So you know in your mind, oh yeah, if I put it there, 99% of the time I'm going to be good.
yes, and it changes with each market that you trade. And
Yeah.
that's also why I use the ATR, but often I back test, I figure out what is an appropriate amount of distance that works consistently. So a good way to do that is and it's a there's a quick way to do it too so that you don't have to uh like do too much back testing where it takes up a lot of time, especially for just like us trying to figure out what works for a stop loss. So I
Mm,
typically wouldn't do that on a 5 minute. I'll go to like a probably about a 15, 30 or hour, and I'll look at what the ATR is. Typically the 30 minute to an hour, I'll look at what the ATR is and I'll figure out what stop loss worked and what stop loss didn't work based upon my levels. So I know that typically $1,000 to about 1250 consistently works with quarter levels on Bitcoin, and sometimes it look like it's a lot, but sometimes that's the perfect amount. Like, see right here, it seemed like it was a lot of you gave it a lot of room, right? Like
Mm.
if you entered for whatever reason, it's very cherry picked, but we're just assuming that there's some type of confluence with this level, and we entered right here at this quarter level. Um, so 1,200. Let's make it exact. 125. Zero. Okay, so it looks like a lot right here, but if you bring it over here, all this drawdown that you would have been perfect, so that you didn't get
Yeah,
stopped out of this trade.
yeah, yeah.
And even more so right here, look, perfect. So I try to find what does not work and what does work. And so that whenever I do set my stop loss, I'll know consistently that like $800 doesn't consistently work. It worked earlier, it worked on
Mm.
this first week right here. It worked, and for back testing purposes, I always just assume that let's just start with the 1 to 1. So 800, it worked here, but then on this last one, it didn't work at all. On this
Mm.
candle right here, it didn't work at all. It didn't work
Mhm.
here at all. And then if you go to, let's say, this one, it worked here. It worked here. That was fine. That was fine here. But let's see, this one, it didn't work because you would have, oh, did you get stopped? Oh, well, yeah, if it was 800 exactly.
It's very close.
8:30, yeah, so then you woulda got stopped out. So I try to find something that consistently works so that I'm not just getting liquidated on my positions unnecessarily.
Mm.
And it really depends on the volatility. So that's why sometimes 800 works, but sometimes it doesn't work at all. It's because when the market gets really volatile, it doesn't work. So I do a combination of analyzing the ATR, and I do a combination of knowing what works consistently and what doesn't to give me my range. I'll usually do at least $1,000 on Bitcoin, which I I don't know if that's 100 pips or something like that in correlation to forex, but I would assume it's something of the sort.
Mm.
So that's kind of quickly how I figure out what stop loss works and what doesn't work, and how I can uh, pick a stop loss that works. And I won't usually do like two times ATR. It might be like 1.2 or 1.3 times ATR, because a lot of times we do two times ATR, it'll be too much. Like
Mm.
if the ATR is 800 or something like that, then it'll be like 1600, which, I mean, it could work, but it might be too much. It might mess up the risk to reward too much. So 1000 works here. Um, so that's basically how I go about doing that for the stop loss. But that's just for stop loss. That's not necessarily for like strategy and stuff.
Yeah.
Um, and then along with that, I'm usually putting my stop loss in a place that's supported by market structure. So
Right. Yeah.
um so let me go back down to, let's say, the 15-minute. Hopefully it gives me the same levels that it gave me on the 5 minute. I just want that 2500 level to pop back up, which was about here. So let's go to let's see, let's start with 10-minute. Maybe it'll pop up there. See, 1000 didn't work here. No, gotta go to the 5 minute. Oh, wait, no, I think that was it. Let's see. Yep. Okay, cool. So my entry was here. So my stop loss was somewhere over here because of the market structure. So the idea is that the market is making lower high, lower high, Any one of these could be a lower high, but we'll say this is a lower high, and then it broke structure right here. So it was like a counter trend here where it was trending up, it broke structure. So this was a lower high, and I figured at some point we're going to retest this consolidation here and make another lower high. So I know that if I want my stop loss to go in a place where it's invalid based off of market structure, based off of supply and demand zone, based off of moving averages, I know I need to have my stop loss somewhere above these highs, because
Mm,
structurally, if the market starts breaking above these highs, which it did, and we could argue that this was just a liquidity grab because there's a
oh, yeah.
double top right here. So one, you could say this is another one, but this is double top liquidity right here. We know that there's money of liquidity sitting here. All it did was just shoot up into this liquidity, came back down. And once I saw that, I was like, I think it was a liquidity grab, but I don't usually chase the market. I don't usually like re-enter with a market order. I usually try to let the market come to me, but by that time, it was already too late.
It's all right.
So I set my stop loss there because I said, okay, well, if the market goes up here, it's gonna my trade's invalid. And the thing is that, and this is one of those situations where the market isn't perfect, where it's not gonna go above those highs. Sometimes it does go above those highs, but the market didn't spend too much time over there. It shot up there real quick and it came back down. So that's indicative to me that, especially with this wick, it was telling me that there was so much selling pressure that in this candle the market could not push any higher. It was a lot of liquidity. There's a lot of limit orders that got absorbed and pushed the market back down. So sometimes it will happen where this type of thing happens, and that's why I do like wider stop losses, because let's say that I wanted to have my stop right above those highs, just right above those highs. Well, as you can see, I would have got stopped out and I would have got taken out of that trade, and then it would have went exactly into my favor. So that's why I like to give it a bit more room for those exact scenarios where I'm like, hey, I'm giving it a bit of room because I think it could end up doing something like that. I don't
Mm,
usually have like super tight stop losses, although that's a good way to get a better risk to reward. It's also a good way to get stopped out of your trade.
mm. Do you put on a smaller size if you're going to have a big wide stop loss like that? Because if you do like a normal kind of trade, say you're risking $100, and then all of a sudden you put on a really wide stop loss, you're risking maybe $200 or $300. That's going to be a big chunk out of your account. Um, if things just go the wrong way, kind of thing. So you've got to think about position sizing at the same time.
Yeah, yeah, and that's an excellent point. So what I've been doing lately is I've been taking starter positions and then sizing it to my trade, because I'm not, as of right now, and it could change. I'm always just trying to find what's the most optimal way that I like to trade that works for me and works for my level of patience. And I'm eventually going to make a video on like what type of trading styles people should be trading based off of their personality. I'm a very patient person. I don't mind holding my trade for days. I've held trades for weeks. One of my best trades this year was a stock called LAC, and I held that for about 2 months. It was an options
Well,
trade. It was option. I had options in shares, and I think I bought it at the end of like July, and it didn't make a move until September or August, and that's when the Trump administration said that they were taking a stake into that company, and then it gapped up massively. So like I'm extremely patient. Like I know how to hold my trades,
mm,
and with that, I like to scale in. The thing about scaling in is that it changes your average price. So typically, if you have a trade where you want to, let's just make it easy. Like if you wanted to risk $100, typically you would at least want to risk like you would want your entry to be $75 and then scale in with the rest once you get more confirmation. What that does is that if you do end up losing your trade, you'll lose less just from the risk structure alone, just from sizing in
mm,
alone of only when you get confirmation. Because with limit order entries, you have no confirmation. You are anticipating something in the market, which inherently is lower probability than uh waiting for confirmation. And I need to put and Lance Brightstein literally just posted a video on this concept today. I'm going to post that in the school community. He's a verified 8-figure trader. He's really really good.
mm.
And he talks about something called the right side of the V. And let me see if I can pull up a screenshot real quick because it's actually quite interesting. I think if you've taken the course, I've talked about it inside of the course. Let's see the right side of the V. Okay. Open. Open image, a new tab. Um, let's see if I can. Oh, I think the thing is bugged out. Okay, well, let me just bring this over here. Yep, it's bugged out. That's okay. Let's see. It's not pulling up the screen. I think I have to. Okay, so this is like the concept here is the right side of the V. Here's the video that he literally just posted today.
Oh, yeah.
So it's basically this is basically waiting for like confirmation. So he's saying that how um the same price yields a different expected value once the market turns. So going back to this example right here, with a limit order, the market hasn't turned yet, so therefore your stop loss does need to be wider. But after it puts in that turn, you could technically enter. I don't like this candle as an entry on a 10-minute because look how strong the buyers are at the base of this candle. I think this candle is way better because this 10-minute bar is now expressing that buyers in this 10-minute candle still cannot push the market any higher than where this is. So now you can risk a little bit less because the market has turned and this is potentially a lower high. That's basically what that concept is saying, that
Mm,
once that market turns, you can have a shorter stop loss and your expected value of the trade goes up, meaning that how much the probability and the reward in both increases. And I like that for sizing in. I don't necessarily like that for my first entry because I want to get in exactly where I want to get in. So I try to use both of those concepts. So with a limit order, you're on the left side of the V. Where when you're scaling in, you're on the right side of the V. Does that make sense?
yeah. Got it.
Okay. And I'm gonna share that video because he explains it way better than me. But that's just how I do it. Because when you have your first entry, if your position size that you want to risk is $100, if you only risk 50, let's say you risk $50 in your entries right here, and you for some reason waited for, let's say you didn't scale into like right here. Well, now your average is about the distance between them both. This
Mm,
is getting a little
mm,
bit messy. Let me pull this over. So your average is probably going to be somewhere in the middle of here, which isn't a big deal in this situation because the market just just kept selling off, just kept selling off, which is fine. But sometimes um if your average comes down and the market sells off and it does some stuff like this, now your average is like it's really not the best.
mm,
Um, so if you sell with $75 here and you scale in, let's say you waited until it got even lower down here to sell another $25 to make your position size $100, your average won't move that much because the base of your position is so heavy that when you scaled in, it doesn't move your average that much. So if your entry's here, your average might end up being like right here or something like that. So
Yeah.
it's still like super close to where you wanted to enter in initially.
Mm.
And that's basically what they call pyramiding, where let me see if I have the tool. So this is a pyramid. So so the bulk of your position would be right here. So because this is the base of the pyramid. So
Mm.
where the pyramid is the heaviest is the base, and that's where the bulk of your position size needs to be. So I don't know where my tool just went. It just disappeared. Okay. So if this is your position size of $75, it's a little bit hard to see. Okay, so if your position size you want it to be total of 100, the base is $75, and then when you add in the rest of this is like $25, and then you can do that multiple times. So you can add 25 and 25, and then those are really small positions and it'll bring your average down, but the base of your pyramid, the base of your position is still like way up here at the top.
Yeah.
So rather than doing something like this where you sell maybe your initial position is just $25, and then once you get confirmation, you get you start to sell more. Well, it messes up your pyramid because now the base your heaviest position is way down here. So your average is going to be like closer to where this number is rather than closer to where this number is.
Mm. Yeah.
So
Yeah. Cool.
so that's how I like, but that's only if you're scaling in and if you know if you like managing positions. A lot of people don't like doing that. They just like to have one entry, one exit, or
Mm.
one entry and just trail stops or whatever. And that's totally cool too. And that's in that case, you just completely enter with $100 and have your stop loss where it is and just be done with it. But I have found that uh it does it does help your metrics a lot better when you scale in instead of going all the way in, because sometimes those that first position that you have for that pending order will just get immediately stopped out, and rather than you having a max loss of $100 on that position, maybe you just lose $75 on that position, and then
Mm.
that stuff adds up, because if you end up losing more, if you end up having more losses, when you lose it's only $75 compared to $100 that you would lose consistently if you went in with your full position right off the bat. And then
Yeah.
when you win, if you go in with 75 and you add 25, now your position size is 100, and now the expected value has changed. You might even want to size up more, so your position size might end up being 150. And because the trade is looking so good, like this would have been a really good trade. If I actually sat down and traded it like this, like every single bar was just red, like red, 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 just kept selling off. Another retest of this level right here. What is this? This was $1,500 level. Look, retest. Buyers tried to push the price up. No, rejection. Just it just kept falling. Like this was just an amazing, just just unbelievable sell off. Just down, 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 down. Like this is one of those trades where you dream of because it doesn't fight back. It just goes in one direction. It's an amazing trend. Uh, so going forward, I definitely know what I need to do and how to make it happen. And for me, getting things in writing and reviewing that every single day is just so good. Just like review your trading plan every single day. Review what you're not going to do, what you're going to do, what you're not going to do, and why, and what you're looking for as well. Having your playbook of knowing what you're looking for. My bread and butter setups are break and retest on a daily. Like it's just that's all this was. That's this There was support right here, support, support, support. We retested it. I wanted to actually enter exactly at this level because this is a it's not showing at the moment. Let me see. Let's see. I think it was this level right here, this 700 level. because this is right where that support was. So I wanted to enter right there, but I think I was looking at Nasdaq at the time, and I didn't place a limit order, and it would have been just like that. My stop loss probably would have been right at that, right on the other side of that next zone, just in case this level held as resistance. My stop loss would have been there, and I would have been I would have been sizing in, trailing my stop, and looking to hold the position as long as possible. And it would have been an amazing sniper entry. I did have this trade right. Let's see which one was it. This trade right here, and this one was good. I entered right here. I had this trade. I posted that in the school community, and I ended up getting stopped out. I took a little bit of profit here because I had a feeling it might bounce here because of all this consolidation right here. So I took a little bit of profit here, and then I trailed my stop. I think I was trailing it with the uh let me go to the 2 hour time frame. I was trailing it with the 10 EMA. Right now I think I changed it to 5 and 13. So yeah, so I entered short about somewhere over here, and I trailed my stop loss with it. And I said that if it tags me out of the trade, and my stop loss wasn't like that, probably would have been like something like this, or I can't remember what it was exactly, but I said that if it gets back above this level, then I'm okay with that. I'll look for a re-entry. And sure enough, it tagged me out overnight. It popped back up, and it was, wait, was that it? Oh no, this was my entry. Sorry. This was my entry. And I was trailing it with the 10 EMA. Yeah, okay. I was like, that didn't look right. Okay, so this was my entry. This was the pullback. And I had a feeling it might do a 61% pullback, which it did. It pulled back exactly 61%. Wow, that's crazy. So it pulled back exactly 61%, and I had my stop loss right above here because I said that if it gets above this support level right here, I'm okay with that because it's above the what should be resistance now. And it got back above it, pulled back 61%. I got stopped out for my position that I was holding. And then that's when I woke up and I saw the market. And my chart is usually on the 2 hour and the daily. So this is usually what I have it as. I'm usually looking at it like this. These white lines are Bollinger Bands on the daily. It's just something I was experimenting with because Lance uses it. Um, so I woke up, I saw this candle. Let's see, no, this is 2 a.m. So I saw this candle, and I went down to a lower time frame to find the quarter levels, to find a supply and demand zone. And usually what I'll do is if I don't want to zoom in too much, I sometimes would just measure half of that bar on the 2 hour time frame. So I would look for 50% of that bar and look for a 50% retracement into that bar, and then I would just set a limit order right there. And and that's something that you should definitely back test because that tends to work really good. Like if you get like a bearish engulfing candle like that, if you just pull out, this is a GAN box. You'll have to edit it on your trading view. Is this right? Yeah, this is a GAN box. So you just open it up and you just turn all that everything else off and just have on the 50%, the 0 and a 1, and
Hmm.
you can back test that. Like check this out. This is a 2 hour time frame, by the way. Look how perfect that is. I know it's a lot. Let me turn off all this stuff so we can clearly see. So let me delete. I'm gonna keep this. I'm gonna delete this, 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 and I'm gonna make it red so we can like really actually see it. Boom, boom, boom. Okay, so this is a GAN box. I'm gonna delete this. So bearish engulfing candle, 50% retracement into that candle, rejection. Okay, 50. It went above 50%, but your stop loss. Oops. Ideally, your stop loss is somewhere above the prior bar highs, but if you had it like right here, you would have got stopped out. That's when the ATR and knowing like where your stop the distance should be comes to handy. But 50% retracement came back down. The crazy thing is that I think this is also a 50% retracement. Like, look how big this candle is. Pull it all the way
Mm.
down. Look, 50% retracement. into that
Wow.
2 hour. That's
Wow.
crazy. What happened to my camera? It went out of focus, but 50% retracement and it sold off. Like that, you can't get much sniper than that, man. That's phenomenal. That's phenomenal. Look, let's bring it over here. Let's bring it over here. 2 hour time frame. That's why I say back test this stuff. This is something that I back tested, so I know it works. So the criteria is that we need a engulfing candle. So bearish engulfing candle, pull out 50% of that candle, put your entry there, your stop loss somewhere above the highs, but not too close because you don't want to get liquidated on a liquidation. What is it called? A liquidity grab. So somewhere above the highs, we know 1,000 pips work. Boom, cash money. I just showed you 4 examples in a row of it working. So it's like it works really good in trending markets. And it works
Yeah.
because of basically the market, basically when there's an imbalance, the market is coming back to retest that imbalance. So if a market creates a bearish engulfing candle, it's because there's an imbalance of sellers compared to buyers in the market, and
Mm.
the market wants to come back and offer the price back to people who wanted to buy here. But the last time the market was here, buyers couldn't buyers could not push the market any higher than this. That's why this engulfing candle is here. So it came back, and buyers once again could not push the market higher. And in fact, there was even more supply here the second time they retested it. So context is everything, like it's not, obviously this is not like a holy grail or anything where it always works, but for trying to figure out a way to enter, it's really good.
Mm.
It's Yeah, it's really good.
Yeah. Good way to enter on a trending market. If if you don't catch the pivot, you
Exactly.
jump it in halfway through.
Exactly. Yeah, definitely. Definitely. Let me figure out why my camera stopped working. Okay. I must have clicked the button or something. Okay. Let's get back to that. So how'd your trading go this week, guys?
Average.
Yeah.
Same here. Mix. Um, yeah, I need to be on top of it a little bit more. I had two losses, one win. So just
Was it only one pair or what were you trading?
I traded. It was actually across three pairs. So, but they were all for some reason JPY. So it was each no, it was GJ, New Zealand JPY, and what was it JPY?
Let's see. I believe I allow screen sharing. Would you like to share what
Okay, let me try to share.
okay. Let me see. Do I okay, I stopped mine. Let's see if you can share yours. Okay, nice.
Yeah. Okay, this is actually funny enough the one that ended up work. This no, not this one. Sorry, this is a loss. So this is the idea behind this one was looking at
Looks-
trending. I was looking at it 2 hours and thinking
It
it's
looks
trending.
good.
Looked at this level. I thought maybe level might be good. Uh,
Yeah, it looks good. Got the
yeah,
support of the moving averages, the structure is there.
yeah, yeah. So, but I think my stop was a little too close.
Let me see how many pips
I
is
was
that.
looking at the ATR for this, and so I
Uh,
think I just even added a little bit on top of that. But no, I don't know if it will show me the latest ATR. But anyway, so that kind of stopped me out just
20 27. Yeah, 27 pips is a bit smaller. Um so stretch that out to like 30 pips. Would that have worked? I'm thinking it looked like it probably would have worked. 30 30
30.
pips. Yeah.
Yeah, just yeah, it
But
would
it
work.
would have also, I understand that it also would have changed your risk to reward ratio.
Yeah, because I normally, well, I could have, if I was just going purely one to one, I think I would
Mhm.
have had my 1 to 1 if it was just 30 pips. Um, so this was clearly, I think I was too close. The Aussie one actually ended up going in the opposite direction in the end. So I was looking at this level as well. This level actually. And after this move, I have my entry here. And it kind of, yeah. So, but he completely went against me. So if the stop here would have been, oh, how much did I have as a stop here? I had 22, right?
Mhm.
30, 30 would have probably just, yeah, but eventually would have come back down.
Yeah, eventually would have come back down
Would have come
to
back.
stop you
That
out. So
Yeah, would have come
this one
back
would
down.
have been a loss no matter what.
This would have been a loss. Yeah.
Mhm.
Then the GJ one, a bit interesting. This was actually against my typical direction, but I was thinking, what was I thinking here? For some reason, I felt like, was I looking at this time frame?
I think understand why of like looking at that level
Y-
that
y-
you are entered
y-
in. It does look
Yes,
like it's been prior resistance.
yes, I think exactly that's what it is. Oh, it come back here, it's come back here down. And I'm thinking it's come back up here. This looks like this is a level that price may react off a little bit, and this up ended up working for me. So this
Oh
one,
yeah, look at that.
yeah, this one ended up being a 1 to 1 for me.
Oh nice.
Um, yeah. So, so actually, on in I was this one, I had two entries in this case. So my hope, I was actually thinking, I believe it's this one. Yeah, I had two entries. One I wanted to do 1 to 1, then the other one I was looking to go further down, to see if price actually changed. So so as soon as it went 1 to 1, I kind of pulled it to break even. While I left one to do just purely 1 to 1, the other trade was the one break even, and so it didn't go down. It came back and just stopped me out break even.
Mm, okay,
So does that make sense? Because I know
definitely.
you've talked about being able to allow trade to run.
Yes.
So this is why I'm like, in my the way I kind of like kind of thought of doing it was to have two entries, one just purely 1 to 1. It will be half my size, my typical size. Then the other one will be the one that I'll allow to potentially go, excuse me, 1 to 3, one to whatever. So this is what I had in mind for this one.
Okay, got
So
it.
yeah,
If I have anything that I was thinking to say on this one is for letting it run. I
yeah,
would say that if you can experiment with the idea of only letting it run if the moving averages is already going in the direction that you want it to. So for
right,
in this case where you wanted to leave that runner, if
yeah,
price was already below that moving average, that
right,
blue moving average, I
yeah,
think that would have been a good idea. So, like in the instance, if you look slightly to the left where price had that big sell off and it was below the moving average, that would
that's
be in a situation where I would love to leave a runner because
right,
typically when price is already below the moving average, it's already trending in that direction and it
right,
increases the probability of a runner
fine,
happening of you catching a bigger trade.
right,
In the
right,
case of this one, structurally, if price is above the moving averages, it's because and this is a 2 hour at that. So that
yeah,
means that on the higher time frame is probably making bullish structure and it might not actually have a runner, which in this case you can see why it didn't have
yeah,
a runner. Like it was still bullish structure. So we're
yeah,
trying to make sure that we have like a system and logic in play for identifying when we should have a runner and when a runner
yeah.
probably is unlikely.
Makes sense. Makes sense. I was really hoping this one would sell off like this other one. I was hoping this
Yeah,
would sell off like this.
exactly,
That
right.
would have been fantastic, but it didn't.
Yeah, but you can even see, like, pretty consistently, like, whenever the price is above or below the moving average, that's when you get those big moves. That's when you
Right.
get those the ones where
Yeah.
you control it, like
Yeah.
at what period moving average? You said the 50?
50. Yep.
Yeah. So that's pretty good.
Yeah.
But
So that's
overall, these are good trades, yeah.
yeah. Okay. So I guess it's even if it's good trade, doesn't mean you win everything, right?
Right, yeah.
Yeah. So
Yeah.
hopefully the next week could be better. And I want to be. I'll try and be on. I'll try and plan. I think never. Do you kind of like start early and just plan your trip, plan thing for the day? Sometimes because I have to go to work. Sometimes I have to. If I don't get up early to plan,
Mhm.
it's gonna be really hard for me to make time to trade for the day. That's just
Yeah.
what I'm struggling with at times
I
now.
yeah, I totally understand. So that's typically what I do is I wake up, I'll take a look at the markets, and then I'll set my trades, and
Right.
then I'll monitor them throughout the day.
Right.
Back when I was only day trading, I would set my entry, stop loss, and take profit, and that would be done. I wouldn't have to monitor the trade. It's either going to hit my take profit or my stop loss.
Right.
And some people do like it that way because it's very systematic and methodical. Like you don't have to think
Mhm.
about it out the day. Like you either hit
Yeah.
your take profit or stop loss. But
Mhm.
because I have flexibility throughout my day to like look at the chart, I like to
Yeah.
manage my trades so I can hold them longer. So there's
Gotcha.
pros and cons to it. Some people don't like, they just want to set it and be done with it. They don't want to be thinking about it throughout the day, which I totally
Yeah.
understand.
Yeah.
But yeah, that's typically what I do. I'll wake up, I'll look at the chart, I'll see what's going on, I'll check the news, make sure there's no data coming out, or
Yeah.
see,
Alright.
maybe there's tariff stuff that's going on, or there's always something's going on in news. So I'm just trying to figure out what's the market thinking about, what they're
Right.
digesting. Are they risk on or they risk off, and then I'll uh set my trades.
Yeah.
And
Okay.
I'll set alerts so that I know when to scale in or scale out.
Yeah.
But overall, I do like the higher time frames for people who are busy or they have
Right.
jobs or businesses. I really do think the higher time frames do them justice because they don't necessarily have to be at the computer all day because they don't typically have the time to.
Right.
But it's ultimately still up to that person because sometimes people, if they have like 2 or 3 hours in a day, and even if they do have a business, they just kind of want to trade during that time frame and then not trade at all for the rest of the day because the
Yeah.
most volume is usually in the morning time.
Right.
That's
Right.
usually in the
Yeah.
morning in the U.S. time, New
Yeah.
York stock market open time. That's when we usually have the most volume in all of the markets, including forex, because
Right.
that's the crossover period time.
Right.
So that's when people only like to trade, and then the rest of the day they're like, "No, I don't want to trade for the rest of the day." So it's up to that person.
Yeah. This should have been an interesting sort of entry as well.
Yeah, that would have been a good one too. I like to take those trades as well, even if it's a counter trend trade. I would probably
Right.
take like a 1-to-1 on that one.
Yeah.
My entry would be exactly at that level,
Yeah.
and it'll probably be like a what is this GJ? So it'll probably be like a 30 pip stop loss, and I'd probably just take 30 pips and be done with it.
Yeah.
Let's see, does 30 work? Yep, 30 works.
The theory
Yep,
works. Yeah.
it'll be right above those highs.
Yep.
Wow, look at that. That ended up being that ended up being a really good
Yes.
one. That's a three
Uh,
R. Yeah.
nice.
See, the problem is that it's a counter trend trade, so it's
Yeah.
like you don't necessarily know it's gonna do that,
You
you
don't.
know, you know, or it could end up happening was exactly on that one to the left. You could end up being liquidated. That keep
Yeah, like
going.
this one, right?
No, keep going to the left. The one on the ninth.
Ninth.
Yeah, so
Which
like yeah, so like if you end up
okay, let
going
me get
short at that exact same level, you would have
right.
took a loss and then it would
Yeah,
have came back down.
that kind of
But look, if you look higher at that 205 level, that's perfect as well. So it's like
yeah,
we never actually know what level is going to be resistance, and that's why
yeah,
I stack my trades and I'm 100% okay with losing because
yeah,
I know eventually one of my entries are going to be perfect. It's going to be absolutely
yeah,
sniper.
yeah, yeah, yeah.
Yeah. Excellent.
Awesome. Yeah, thanks.
So what? So for the yen pairs, do you find it useful to trade that many different yen pairs? Do you think that you would have better performance if you pick like maybe just two yen pairs instead of three?
Yeah, I guess. Yeah, because they're correlated, right? So
They're
the
very
risk,
correlated. Yeah.
yeah, the risk I guess goes up if I trade multiple yen pairs at the same time, right?
Yeah, I would tip it for me. So I just pick one yen pair and one major. So it
Uh,
might be like Euro, yeah, Euro USD and Euro JPY or GBP JPY and Euro USD or GBP USD. And I typically just play trade Euro JPY. I find the order flow to be way more clean, and this is from like years of trading GJ. I think
uh,
Euro, it just GJ, it makes bigger moves, but it's
right,
also the way that it moves is more messy compared to Euro USD. I mean
right,
Euro JPY is way more clean if you look at that chart. So I typically just trade one yen pair because they kind of move in the same direction. They're very much correlated. So like
yeah,
if the yen is strong, whatever it's paired against is is gonna be weak. So
yeah,
even if you trade both Euro JPY and GJ, they're both gonna be selling off
right.
if the yen is strong, so it's might as well just pick one
Take one and trade that.
rather than, like, if you trade GJ and Euro USD, the yen might be strong, but the USD might be weak, so, you know so, yeah, that's my thoughts on that.
Yeah, yeah.
Very good. Do you have, anything, Trader Parker? You wanna share screen for anything?
Yeah, I don't know if I'm on my iPad. I'm not too sure if I can do it on this.
Let's
But
see,
yeah, I haven't really got any trades on there anyway.
okay.
I yeah, I've been working through one of those Mark Douglas workshops that's on YouTube,
Yeah.
and
Is it
man,
the
I've
one
been
that's 7
watching it
hours long?
since. Yeah, wow, I've been watching it since Tuesday.
That's a good one. I wanna go back through that one and take some notes, man, it's so good.
Is it
Yeah,
Mike
yeah,
Douglas?
Mark Douglas.
Mark Douglas.
Can you post that video in the school community so, Trader Seshman can
Oh
find
yeah,
it?
yeah, sure, yeah. It's he doesn't, well, maybe at the end, but he doesn't talk about trading much. It's all about psychology.
Psychology, exactly.
Um, he
Yeah.
talks about doing like mindfulness meditation,
Okay.
and kind of like exploring your shadow self, I think, or exploring your beliefs and trying to get rid of beliefs that you hold that aren't actually helping you.
Mhm.
And yeah, I've been finding it quite eye opening. It's an old video. It's like, I think it was made when they just invented video cameras. So it's pretty grainy, but there's
Yeah.
some real good stuff there.
Yeah. Yeah. That one's probably one of my favorite ones. It's really long, but, like, there's so many good gems in there. I really wanna go back through it and just kind of, like, uh, pick apart and take some notes and so I can make a video on it 'cause, it's 7 hours, it's a lot of content. That's like a whole course right there.
Yeah,
Um but it has a lot of really good content. I think one of my favorite things that he said in there was like, every single trading error that you'll make will come from you thinking that you can know what's going to happen next.
mm,
And I keep running that through my head myself because I'm like that is true, man. Like we think that we can know what's going to happen
Yeah.
next, but
yeah,
yeah, you can't. It's not possible. Like
Yeah.
yeah.
And I think that's
He,
why trading is more of a psychology that it's not
yeah,
if you do a job, you can know your job well and know the exact outcome you're expecting from doing something in a certain way. But trading, you can never know the exact outcome of it.
Exactly. He says that too. He's like, in every other profession, you have to know what the outcome will be. Like if you're a doctor, um, if you're a lawyer, like you're tied to those outcomes. But like in
Right,
trading, you can't be tied to those outcomes because you're not in control.
right,
yeah,
exactly. You're not in
mm,
control.
Yeah.
So,
Yeah, I
Yeah,
think he says, you can have the most perfect setup, but it just takes one other person, on the other
To
side of the
negate your
world to do
edge.
an opposite, take it, yeah, trade to just throw you out.
Exactly.
Yeah,
Exactly.
yeah,
Exactly. Yeah.
yeah. And yeah, it's really topical for me. I last week I just had a messed up week because I had maybe 3 or 4 days in a row that were just really bad. Like
Yeah.
I thought I got this really awesome edge, but it just didn't work for so many trades. And
Yeah.
so then I started looking around for other stuff, and yeah, that I just kind of went down a rabbit hole. I don't know. Have you seen? There's a guy on YouTube, and he's got a program called the Quant Crawler, and it's something that he's made up on ChatGPT, and it's basically you take screenshots of the chart and you put it in the ChatGPT program thing, and then it spits out a recommendation on how to take a trade.
I haven't seen it, no.
Yeah, so yeah, it's called Quant Crawler, and he says he's getting really good results from it. So I thought, oh yeah, I'll get Claude to make me something like that. So I spent about 2 days getting Claude to do it, and then I back tested a little bit, and it was awesome. And but then I started live testing, and it was rubbish. So then I went all the way back to my original system, and yeah, and Mark Douglas says that you got to go through some stages as a trader, and I think he says number one stage is to become a mechanical trader. So you've got
Mhm.
a little system that you got these rules, 4 or 5 rules, and if they all line up, take the trade, and if they don't worry about it. And he said do that for 20 trades, no matter what, and then reassess it. And so that's what I'm doing at the moment.
Perfect. Exactly.
Yeah.
And that's when I start to become a consistently profitable trader myself, is when I start to get those exact rules into place. And that's why I even came up with the indicator, because I need the basic thing that I do is confluence, and I'm like, well, if I can just
Mm,
you know uh, make an indicator so I can speed up my time of trying to figure out what the confluence is, and that'll be
mm,
amazing. So yeah, and then I did exactly what he said, and then I start to get good results. So he knows what he's talking about, and yeah, it's true. I think the main thing that we have to do is figure out what works for us and then stick with it, because the strategy hopping, man, that
yeah,
I strategy hop for years. I wasted so
mm,
much time just strategy hopping because I think something doesn't work when in reality it does, but you don't have enough volume of trades to like
yeah,
know that it works. We have
yeah.
such a small sample size.
And you can go back and back test it, but it's not the same as
It's not
live
the same as
as
live.
live tracing.
Yeah,
Yeah,
exactly.
yeah,
Yeah, because it's missing some components. The components is missing is trading psychology and also whatever is currently happening in today's markets, because the markets are always changing, you
yeah.
yeah,
know. So yeah,
yeah,
Mm,
but I'm optimistic about the week. I'm gonna
Me too.
we're gonna do our best, and and just to remember, try to be process driven and not really focus too much on the outcomes, because your edge gets played out over a series of trades, so you're
Yeah,
not
mm,
going to really see how good you are until you've taken 20 trades, 40 trades, 50 trades, 100 trades. That's how we look at it, and not like a trade by trade basis.
yeah,
So that's the toughest part about swing trading, is that you don't necessarily get in the amount of volume of trades that you need to
mm,
like to see, but
yeah,
you can end up getting really good trades that are really good runners, and that offset is worth it to me. So,
mm.
but I'm optimistic, and I'm gonna keep posting my trades because I enjoy being transparent. I love the feedback. I love to see what you guys are trading, and trade assessment. Make those posts more
I
often,
will
man. I
do.
want
I
to.
will do. I wasn't confident in my trades, but I
That's
guess I did.
okay. It's
Yeah,
okay. I
Well,
just consider this community family, man. Like
yeah,
we just want to support each other. Like we're all gonna lose, so it's like No one's gonna say, man, that trade's stupid.
Okay.
Because even the counter trend trade you took on GJ was a winner. You know what I
Yeah.
mean? So it's like it doesn't matter. Like some people taking buys, some people taking sales. Like it's both at the same time all the time. It doesn't
Right.
matter. You know what I mean? So we're all just here to get better, and I'm not, trading God, trading Google, whatever. Like I show my trades and I would love feedback as well. And we can just talk, we have a dialogue about it, like why I
Yeah.
took this trade. And you like, I don't necessarily like understand why you took that trade. And I'll explain. And if, it's
Yeah.
just we just creating a dialogue. It's just
Yeah.
family.